Opening a new capital market in Ethiopia, like any significant financial reform, comes with both benefits and challenges. To provide a detailed explanation of factors against opening a new capital market in Ethiopia, here are some key considerations. 1. Economic stability and development. Economic stability. One of the fundamental prerequisites for a successful capital market is economic stability. Ethiopia has experienced fluctuations in its economy, including high inflation and currency devaluation. These economic uncertainties can be exacerbated by the introduction of a capital market. Investors are more likely to flock to markets where they have confidence in economic stability. Size of the economy. The size and diversification of Ethiopia's economy play a critical role. A capital market relies on a large and varied pool of investable assets and listed companies. In a relatively smaller and less diversified economy, the scope for such a market may be limited, potentially rendering it less effective. 2. Regulatory and legal framework. Inadequate regulatory infrastructure. Establishing a capital market necessitates a robust regulatory framework. It encompasses rules and regulations for trading, listing requirements, investor protection, and market integrity. Developing and implementing such regulations from scratch can be a formidable challenge, particularly in a country where the financial sector may be in its infancy. Enforcement challenges. Even if regulations are in place, enforcing them consistently can be challenging, especially in a developing market. Inconsistent enforcement can lead to market abuses, undermining investor confidence. 3. Investor education and participation. Lack of investor knowledge. For a capital market to flourish, investors need to be informed and knowledgeable about financial instruments and market dynamics. Without proper investor education, Ethiopian investors may not make well-informed decisions. They could potentially be exposed to risks they do not fully understand. Access to information, transparency is essential. Investors need access to reliable information about listed companies and financial products. In an environment where such information may be limited or not easily accessible, investors may face difficulties in making informed investment choices. 4. Market infrastructure. Limited infrastructure. Building the necessary infrastructure for a capital market is a monumental task. This includes establishing stock exchanges, clearinghouses, and settlement systems. Such infrastructure demands significant investments in terms of finances, technology, and human resources. Technology challenges. Keeping pace with the rapidly evolving landscape of financial technology is a persistent challenge. Ensuring the security and reliability of trading platforms is crucial for building trust among investors. 5. Political stability and governance. Political stability is a prerequisite for the smooth operation of a capital market. Ethiopia has faced periods of political instability and conflict, which can disrupt market operations and erode investor confidence. Corporate governance, the readiness of Ethiopian companies to go public and meet the required standards for transparency, financial reporting, and corporate governance may be lacking. Weak corporate governance practices can hinder the credibility of the market. Six. Company readiness. Business and company standards. Many businesses may not meet the stringent standards required for public listing. These standards include transparent financial reporting, robust corporate governance practices, and the ability to operate as public entities. A lack of readiness among local businesses can hamper the development of a diverse and attractive market. Availability of quality listings. A limited number of quality companies ready for an initial public offering, IPO, can lead to a lack of diversification and appeal for investors. 7. Investor protection. Fraud and manipulation risks. In the absence of robust regulatory oversight and investor protection measures, the risk of fraudulent activities, market manipulation, and insider trading may rise, potentially undermining investor trust and market integrity. 8. Access to financing alternatives. Existing financing options. It's crucial to consider whether existing financing channels, such as bank loans, grants, or venture capital, are sufficiently meeting the needs of local businesses. Introducing a capital market should be evaluated in the context of the effectiveness and availability of these existing alternatives. 9. Long-term commitment and resources. Long-term commitment. Developing a thriving capital market is a long-term endeavor. It demands a consistent commitment from the government and relevant authorities. Ensuring that the focus on market development is sustained over the long haul is essential for its success. In summary, establishing a capital market in Ethiopia is a formidable undertaking. It involves addressing challenges related to economic stability, regulatory infrastructure, investor education, political stability, and market infrastructure. Careful consideration, long-term commitment, and extensive resources are essential to navigate these complexities successfully. In the case of Ethiopia, opening a capital market should be a carefully considered decision. The Ethiopian government and relevant authorities need to assess the country's readiness in terms of regulatory framework, infrastructure, investor education, and economic stability. They should also consider the long-term benefits and risks. Ultimately, the decision to open a capital market should be part of a broader economic and financial development strategy, taking into account the unique circumstances and goals of the country. It is often advisable to seek advice from international financial institutions, experts, and agencies with experience in developing capital markets.